All right. So we are in week 3 of the next level. And this week we're going to be talking about numbers. Is that right, Mr. McCarley? We're talking all about the fun numbers.
Yes, indeed. I'm not going to make anybody add anything today, but I'm going to hit you with some concepts.
Wonderful. Wonderful. So we are, bear with me as I go through this, guys. We are going to, we are up and there we go. How about that? I think that might be better. Jahida will tell me if it's not. But so we're going to go through numbers today. We're going to talk the numbers you need to know. If you are not the expert on your business, if you're not the expert on the numbers in your business, who is going to be? Who's going to be? Nobody can help you if you don't know your numbers. So we're going to get there, and we're going to get to the presentation pretty quickly here. We've got a lot to cover today. So let me get here. So rules of engagement, cover that real quick. As you guys know, the best way to interact with us is through the chat feature. We always have a record of that, and we talk about that every week once we get off the call. Hey, who has the chat? Who has a record of that? Let's go through, make sure that we have answered every question we need to, and if we need to get back with somebody, we can. So if you have questions, comments, concerns, please put them in the chat. That's the best way to engage with us. If you are not comfortable using the chat, if you'd rather speak up, we encourage you to do that as well, if that's what you feel more comfortable with. If you're doing that, the best way to do that is to use a headset. It kind of cancels out that, it mitigates that background noise, that static. And if you're not speaking, we ask that everybody stay on mute. That is, again, cancels out the background noise and the static. And everybody does a really good job of that. So just continue to do that. We appreciate it. It makes the presenter a little more comfortable, and we don't hear anybody on online school in the background or at work. So also should let everybody know that we are recording this. We do put it up on YouTube. And so if you don't want your picture shown, if you don't want your face shown on video for the rest of time as it exists on YouTube, go ahead and turn your camera off. That's okay. We'd love to see your smiling face. I know you guys don't get to see my face every week, but that's because I'm so good looking. I don't want to make anybody feel jealous, anything like that. So,
all right, Adam.
But yeah, so if you want to put your video on, if not, we totally understand why not. And we will go here. A few announcements before we get started. Tech Talks is coming up. Or we're in Tech Talks. Weeks 5 and 6 of Tech Talks are this Wednesday and next Wednesday. We will finish out that series on the next 2 Wednesdays, September 30th and October 7th. We will be working with Mike Warren from View Signage, and he's going to be talking to us about website development and content management. And it's a great, if you guys have not been to Tech Talks, I really encourage it. I go there to learn about this stuff. Last week we talked about social media marketing and all that. And I think that this is a great way to wrap up the series, is website development and content management. So sign up for that. Again, it's free. You'll have the link to that in the chat, and you'll also have it in your email here in the next little bit. Sign up for that. Next Level Virtual Workshop Series, what you're in right now, week 4, next Monday, same bat time, same bat channel, 12 to 1:30. And Mr. McCarley is going to pitch week 4 here as we get into week 3 and wrap up week 3. The big thing that we're working on this week is the Small Business Forum is back. We've taken a month or 2 off here of the Small Business Forum, but every other Friday we are going to have a Small Business Forum. This week is nonprofits, a vehicle for driving community health and wealth, ? So we'll be talking about how nonprofits drive community health and wealth, and whether there's a for-profit solution that can be in there as well, be part of that. And we will have a great panel of nonprofit experts and legal minds on there for everybody to ask those questions of, how do I start a nonprofit? Should I start a nonprofit? How do I manage my nonprofit? How do I make money? How do I bring money into my nonprofit so I can serve my mission? And the first half of that is going to be these panelists speaking about their experience. And then the second half is going to be dialogue, conversation. Everybody's going to get to speak up and have conversations directly with those panelists. So we encourage you to join us on the Small Business Forum this Friday, October 2nd at 11 a.m. So 11 a.m. this Friday, we're going to be talking nonprofits. We'd love to have you there. And before we get into week 3, we have 2 more things we want to get to. The first is I know Mr. Kirkwood has some announcements, some things he wants to talk about. So Duncan, my man, I'm going to hand it over to you here if you are ready to talk about the social media competition.
Yeah, I was born ready. Born ready. You know what I'm saying, Adam? All right. So, good morning, afternoon, everyone. I'll be quick. So we had our final go through of the social media competition, and the number. So we'll go in a reverse order. So third place team or company rather that's going to receive $500 in technical assistance from Pathstone's vendors for one-to-one consultant is the Lish Agency. So y'all give her some love. I want you to know I personally used her business before, and she is amazing. She does graphics, she does logo. She actually created my logo for a couple different projects. Like, they are incredible with graphics, and I know they do more than that now too. Second prize is for Delilah's hair growth serum. So let's give love to them.
Right.
They will also win $500 in technical assistance through Pathstone Enterprise Center's vendors and one-to-one coaching and consulting. And the $1,000 winner of the technical assistance and small business coaching from Pathstone Enterprise Center is Lola's event planning. So Lola's event planning, number one. Woo-hoo! All love. Congrats to all the winners.
Congratulations.
Yes, y'all earned that. And we hope that, you know, by participating, it's helped to grow your social media footprint as well. And just, you know, continue to stay with Pathstone. So I would say email Jahira after this call, so you can start getting a list of the vendors, start seeing what you need, and start scheduling your appointments. And I'll kick it back over to you, Adam.
Awesome. Duncan, thank you so much. Thank you for that program and that opportunity for everybody here to participate in that. And to our winners, congratulations. We will be in touch with you soon to start taking advantage of those opportunities. So thank you everybody who participated, and we're going to keep doing these kind of things from time to time. So you know, keep engaged, keep your ears open, and we're going to continue to do everything we can to get people engaged and get them the assistance and the consulting and the help they need. So, but Duncan, thank you for quarterbacking this, and this has been a lot of fun to watch. So thank you. As we do every week, we talk a lot about networking and fellowship and getting to know each other. And every week we choose 3 people to talk to. We choose 3 people to get to know and hear about their business. And
I apologize. Lola is trying to get in, and she's having a hard time.
Okay. I'll reach out to Lola. Thank you.
You're welcome.
So we are going to we're going to call on 3 people. Now remember, you guys worked on your pitch last week. So you guys worked on, you know, how to say things, how to pitch your business, and you know who you are, what you're doing, and why you're doing it. And this is an opportunity for 3 people to do that. So I'm going to have Jahida call on 3 people, and they can give their 60-second pitch. So Jahida, I'm going to hand it over to you now and let you call on the 3 people you think are ready for that.
All right. Thank you, Adam. So let's go ahead, and I know from last week we have Latoya Shanae. I hope I did not butcher your name. Can you give us your 60-second pitch? Tell us about your business, why you're here. Give us the goods.
Hi. Oh, you did that properly. You said my name right. You did good. Thank you. I'm nervous, so excuse me. I just always get nervous, even though you can't see me. But my partner and I, you guys spoke to her briefly. Her name is Danielle. We've been in business for 5 years. We formulated this idea because we've seen that there was a need for those with lower incomes to come up with a technique and a tactic to secure their needs, their everyday needs. I'm sorry, I told you I get nervus.
It's all right. It happens to everyone.
Take a deep breath.
Bottom line, what we do is we teach coupon classes, okay? We teach coupon classes, and we've secured contracts within the CAO, which is the Community Action Organization, as well as various entities within BPS. I also have a tenants council that we've worked with, that we've contracted to teach their seniors once a month. So right now we're reformulating because the business can't run without us actually being there, to bring others on board and teach them how we've been able to formulate various streams of income for ourselves with the forgotten skill set of couponing and budgeting. That's it.
Perfect. Thank you so much. We really
Wonderful.
appreciate you being here.
Ooh, thank you. I'm sorry.
You made it through. It's all right. It gets easier the more you do it. Trust me.
Okay.
You did good, Toy.
Yeah.
Oh, God.
All right. Let's see who else. All right. We have KR on the line. Can you unmute yourself and give us your 60-second pitch?
Hello, this is Kay here. I just logged in. I'm sorry.
Okay.
I had some difficulties finding the link, but what are we on? I'm sorry. 60-second pitch.
Yes.
Okay, put me on the spot.
Yeah.
This is for like the same as what the volunteers did last week, right? Similar exercise.
Mm-hmm.
Okay.
Yeah.
Hello, my name is Kay. I'm the founder of ABC's Baking, leading baking service in Buffalo, New York. We provide XYZ, etc. I'm not very good at this because I'm ill prepared, but
It's okay. What does your company do?
Well, I have several companies. That's why I never volunteer, because I'm kind of all over the place. I'm a crafter.
Okay.
And planning. I kind of do a lot of stuff.
Okay. And are you looking to teach people crafting?
I'm looking to teach, and I'm also looking to kind of make my hobby into a business.
Okay.
Right now, I do mainly for relatives, and most of my customers are word of mouth from that.
All right. All right. Awesome. Well, we will get you situated so that you know what your pitch is going to entail. So
Right. Okay.
No worries. Thank you so much for being here.
No problem.
So just get into the habit, folks. We will be calling on people in the beginning of each of these sessions. You're going to have to start getting used to kind of repeating these things over and over again. The more you do it, the easier it'll come out. So I will hand it over to Adam, and you guys can go ahead. Enjoy the rest of the session.
Thank you very much, Jahida. Thank you for everybody who shared. And if you guys want to share next week, let us know in the chat, and we will make sure that we get with you next week, and you're the first called. And now I want to hand it over to the man who teaches us how to pitch. And Mr. McCarley, I'm going to hand you the presenter role here as we go into this. Give me 1 second, and you can teach everybody. Week 3, we're going to talk about numbers. It's all you, sir, for the next hour.
All right.
And change.
Thank you very much. Good afternoon, everyone. Can everybody hear me? Give me a thumbs up. Say yes in the chat. I'd appreciate it. And for individuals who were doing their little pitch this morning, again, don't be afraid. It's all about getting that information to come smoothly off your tongue. Should not have to think about telling people what you do or how you do it. It should be just second nature at best. Now, for K in particular, you have 3 different businesses or multiples, and what I say for individuals is that do it for each of the business lines. So whatever the business happens to be, do it for each one. Who you are, what your position actually is, what was the problem that you either noticed, observed, or needed to be solved, what is your solution? How would you possibly go about doing it? You only just need one example. But most importantly, what is the result? And the result in all of this with regard to the pitch, technically is 30 seconds or less. Many individuals come over a minute and they get nervous, but Again, as you had actually mentioned, you do it after a while. Believe me, it becomes so much easier. So much easier. So please, definitely make sure that you work with this stuff. Sometimes you guys get homework. I do that for a reason, because I want folks to be on their game. All righty. This is going to be one of two, or I should say 1.5 aspects of a presentation. One of the things that is actually happening here, the numbers piece really is a long piece. There's quite a bit to go over. And so again, I'm not going to make people add today. People should clap. Let me see some claps or something, because it gets to be real interesting when I have to do that. But I'm going to ask an interesting question. So if everybody on the webinar today, what do you think is more important, revenues or profits? Put it in the chat. Which do you actually think is more important, revenues or profits? And Adam, you can kind of keep a listing of who we seem to get.
Yes, sir. Let's see. I'm seeing a lot of revenues here, Mike.
Got one both. Now pick one versus the other. And I'm going to actually tell you why there is such a significant difference in both. Depends on taxes. Not really. All right. Adam, would you say we're at probably about 50-50?
Yeah, pretty close. Yep.
Okay.
Another profit came in.
All right. All right, so you guys want to know the answer to that question? What is more important? Like I say, it's never half. It's never both. The issue is profits are more important than revenue. Now, can anybody tell me why? And you can actually unmute yourself. Anybody want to take a shot at it? Why are profits more important than revenues? Not that revenues are not or have an importance in your business, but why is it that profit has a tendency of being more important? Anybody? Miss Sydney?
I was going to say, you can have all the revenues in the world, but if you're constantly losing money, you're not going to stay in business.
That is one very good answer. Anybody else? Why are profits more important than revenues?
Yeah, recently I have experience of joining a company for delivering, and I hired a driver. It turned out driver is making in the week, the income that we are getting in the end of the week is less of the money that I spend for the business, including the payment for the driver and the gas and the insurance. So I just ran it for 3 weeks and I stopped it because I can't continue because the numbers are not matching. I pay more, I spend more money, and then I don't get profit. It's zero profit, and that's the difference. You know, you cannot continue business that you're not making money. If you don't make profit, that means it's not a good business. We are all in business to make money, make profit. So that's why profit is very important.
So the one answer that nobody was going, and I knew they weren't going to give it to me because I have no accountants actually on this call. But there is a plus or minus, as Manon actually had mentioned, with regard to the aspect of profit. Why profit has a tendency of being more important is because, number one, profit is the determinant of what you do with your business in the future. And as has been pointed out by a couple of individuals, if you don't have any profit, it's enormously difficult to move forward to actually pay your bills. Now, unfortunately, we are not going to get into this particular piece, but sometimes there's an advantage in not having profit for a company, but very rare. And this is only if you have a lot of cash revenues, which would actually show up on your balance sheet. Does this actually make a difference for people? The other thing is revenues are important. But again, I believe Sydney pointed it out. Again, if you're spending more money than you're bringing in, then it's enormously difficult to carry forward. And for a lot of people that I actually take a look at their stuff, they're not even paying themselves. And part of this, Manon actually made an interesting comment. He's paying for a driver, but he's not making enough money based on the relative deliveries. It is always a game of numbers. And the issue gets to be you just have to have a heck of a lot of deliveries. And you probably would have had to change your price points a little bit for what it would actually cost to actually make the deliveries. So does everybody get it? Give me a thumbs up or whatever, why profits have a tendency of being more important. And for anybody that's actually tried to get a loan and didn't have any profits for your business, if you got denied by a financial institution and or entity, I'm going to tell you that's probably the first reason why you got denied. You have to have cash flowing through the business. Now, one of the reasons why people went to cash flow statements or bankers went to is because for this same reason, when taking a look at individuals' income statements, people were showing that they had profits, but the reality is there are some dollars that we spend on our business that does not show up actually on the income statement. It shows up on your balance sheet. One such example is actually your loans. People are not clear on this, but your income statement should only show the interest that you're paying on a loan if you have a loan for the business. The principal associated for the loan doesn't even show up on an income statement. It shows up on the balance sheet, which therefore means if you had a loan for a business and you had a profit supposedly showing up on that income statement, there's a good likelihood that technically you really didn't have a profit. But we'll go through that as the next couple weeks go on. So again, you see the sun which is rising. We've talked about the new beginning. We've kind of talked about what's your story. And this is one of the reasons why the pitch platform has come into play. And today we're going to take part 1 of 2 associated with the numbers. Now I'm gonna go through a lot of this stuff quickly, and I'm not intending for people to actually remember everything because we're gonna go over some of it again next week. But I am going to introduce to you one of 2 formulas that were actually created by the company, which in their creation created as much havoc as it did when they weren't created. But the idea is how much money should a business actually generate as a matter of revenues in order to cover 4 interesting elements of business money, or i.e., what is it that you spend money on associated with the business? And I'm not just talking about the phone or your employees. There are 4 major categories. The 4 major categories that exist, and people who've got pen and paper, write it down. The first one is your employees. The second one is your operational expenses. The third is operating debt. And the fourth is you. If you get to a point where you can actually pay you, especially what it costs you to live, and you have already taken care of all that other stuff, you're running a pretty good business and a relatively stable one, especially when I show you the success formula next week. But for this week, what I'm going to show you is what's called before success. So in our aspect of numbers, again, I want to make sure that everybody can hear me. Everybody hear me clearly? Give me a thumbs up, put it in the chat.
Can you help to repeat the 3 categories again?
4 categories, 4 categories. Your first, and actually I'll put them in the chat as well.
Thank
The
you.
4 categories are employees, which I know everybody has, hint, hint. Your operating expenses, operating debt, and you. Everybody's get that? Everybody see that? Employees, operating expenses, operating debt, and you. During the next remaining 8 weeks, I'm going to keep bringing this up about what business money actually is to be spent on, because I think it's important for folks running operations to be very clear about the categories, one, in which they're actually engaging in, but more importantly, the ability to generate the kind of revenues which are necessary for you to pay your bills so that you can have profit so you can continue your operations. That makes sense to everybody? Give me an idea, put something in the chat. Let me know that you heard what I said.
Hey, sorry, Sydney. Can you please mute yourself? We're hearing a lot of beeping and background noise.
Oh, my apologies. I didn't realize I came off. Sorry.
It's all right, thank you.
Sydney's over there punching that calculator, figuring out all that money she's making. All right, so next item up for bid on The Price is Right. Every week we go through this. Where do you stand? One of these weeks, I'm actually going to have a moment to really talk to you about the mental, physical, financial, and spiritual aspects of everyone in their particular lives, what it really means. But again, for right now, where do you stand from 1 to 10? 1, just totally sucks. 10, you're doing backflips. And I want you to kind of keep track of this because it gives you an idea of where you're at. So you actually know where you need to go, and this is incorporated in your future planning. By the way, most everything that I am actually talking about, again, the mind of business, and it is all incorporated in the aspect of planning. Because if you do not plan, what's the statement? You plan to fail. So is everybody with me here? Getting a couple of responses. Got a lot of people on the call. Give me some thumbs up. Let me know what's going on. So as we move forward, last week, we talked again about the story. And the story was broken up in, of course, the introduction, who you are, the name of the company, what your particular position is, but more interestingly, what is it that the company does? And that was based on the NAICS code. And that was NAICS.com, NAICS, North American Industry Classification System code. And so if you haven't looked up your NAICS number, please do. And my thing was, even though they're listed as industry codes, if you really take the first sentence and replace, these are businesses or these are an industry that is primarily engaged in, and change it to the business is primarily engaged in, or the company is primarily engaged in, and use the first sentence. It gives you a description, plain and simple, of what your business actually does. And it will simplify a lot of things that you're actually doing, because many of your certification applications, for those that are going for them, they're going to ask you that question. What is your NAICS code? Then there was the observation. Observation was really, why was the business started? What was the problem that was observed? What was the need? What was the pain that you observed? And so because of that particular observation, you have a solution. And the solution that you have is also classified as a feature of your business. And then how would you accomplish the particular solution? It's not a long piece. Matter of fact, all of these are 1 or 2 sentences at best. But whatever you did to accomplish the particular solution is actually a benefit. And then the result, what a lot of people do not always realize, is the result is the wow. It is the wow. What is it that you do that just wows your customers? It's not what you think wows them. Ask them, what wows you? Okay? How do you feel after I provided this product or service? Did it help you? Did it accomplish a need? So that was last week. So this week, playing with the numbers. What you're going to see for the next several slides, and I'm not going to go through all of these, but this was a different income statement. And I pulled these particular terms because one of the things that was going to happen is that I want you to take a look at some of these categories. These are marketing expenses. Now, not everybody has all of these, but you'd be surprised at how many folks actually engage in this stuff. And that you actually pay somebody a lot of times for the combination, all, or part of the services. If you happen to be in a building, what are you paying for rent, utilities? Did you have to do a build out? If you're part of a manufacturing plant, and this is a side piece. I had a conversation with someone this morning who actually does cosmetics. And the thing about it is they really never consider themselves as a manufacturer of the product, but they're doing it out of the home. And they said to me, but I don't have a building. And my comment was, but you have a home. And you actually have expenses out of that home. Your business utilizes some of that space. If that space had been converted and you were charged for it, what would it cost you to be in that particular space? More importantly, I have individuals that actually are home-based business operations that they need to take part of those particular expenses of being in that home. And some of them are deductible. There are 2 ways to actually do it. One, you actually really do your numbers to see exactly what you're spending, or you use IRS's formula, which personally I've never found to be to the advantage, quite honestly, of micro businesses, which are what many of you actually are micro businesses. But again, money that you spent. Yeah, okay, I have a job and my job covers my rent. Oh, that's nice, except you're making something. You're spending, 30 square feet in your house with storage, and you use your garage for actually holding a lot of your products. You need to figure out how many dollars that is. It's not the fact that you actually have a job and your job is going to pay rent. The issue gets to be your business should be able to begin to cover the kind of money that you're spending to live. Because I hope you're going into business not just to make money. You go into business to provide a service, a need for other individuals. And if you're actually providing the most appropriate type of services, the money will come. It really will. Again, your IT and integrated systems. You pay for telephone. Some individuals actually have to buy software for the businesses they operate. They may have to set up a LAN network. They have separate phones for the business versus the personal. And by the way, I'm not going to push this issue, but I think if you have a business, and even other than the aspect of having a Google number, you really need to separate those particular items. I had to separate them because I had way too many people who were calling my personal line at 9 and 10 o'clock at night asking business questions. Don't get me wrong, but I'm trying to eat, take a bath, and go to bed because I'm up early in the morning. But we have to think about the money that we're actually spending on a lot of this stuff. Some people, the suggestion is that you open up a storefront, you actually have to have a hard line which is attached. That may or may not be true, but you need another phone other than one they're calling you on personally. Now, this particular piece that you notice on this screen talks about project contract resources. And you have COGS next to it. That's cost of goods sold. I don't think I have any folks in construction in here, but one of the things that actually happens, your subcontractors that might work on a project that you have, if you're that type of business, this is really a cost of goods sold kind of item. It really needs to go up to the top. And next week, I'm actually going to show you just another form. You'll get one this week, but I'm going to show you another form of the income statement. And this is where a lot of those particular categories would actually show up. It would be revenue, then it would be cost of goods sold, which actually then gives you net revenue. And net revenue, you subtract your expenses for the business, and that's where you end up ultimately coming out with your profit. Some of you have technical support. Is there equipment that you actually have to spend on? Materials, things of that particular nature. This piece here for financials, acquisitions, things of this particular nature. This may be an in or out of cash dependent, and especially folks who are doing real estate. But this too might be a category that is a cost of goods sold kind of classification. But this is also why it's enormously important to actually have yourself somebody that ultimately ends up doing your books. You can start doing your books in the beginning. But what I've come to find is, even with QuickBooks, people don't necessarily understand actually how the system works. And so what they end up doing is they put information in categories which are actually inappropriate. So, you had, a negative number for revenues, and you have negative numbers for your expenses. That's incorrect. You should have a positive number that's for revenues, and what amounts to negative numbers for your expenses, although your income statement just shows your numbers. But this is how the process works. Again, pen and paper, people. Your revenues should be positive. Your costs of goods are subtracted from your particular revenues. Your expenses are actually subtracted from what ultimately comes out to be your net revenues. And hopefully your profit at the bottom is actually positive. And if it's not positive, there are one or two things you need to do. Take a look at how much money you're spending, where you're spending it, why you're spending it, or you need to change the cost of the services you're actually providing. You'll notice on this particular page, travel. Some people actually have to travel for the work. Your professional fees. It might have legal. It might be someone who's an inventor, so you may have a different attorney for patents. Accounting and bookkeeping. Everybody keeps talking about accounting. Everybody does not need an accountant. If you can find a halfway decent bookkeeper initially, and you're actually generating less than $100,000 a year, you can have a bookkeeper. Now, when you decide to go for a loan, the bank will actually sit around and tell you, so we need some accounting records. No, I don't pay for an accountant. I have a bookkeeper, and my bookkeeper keeps very good records. Thank you very much. Here is my items. If you have a question, I will refer you to my bookkeeper. Bank charges. Please give me a thumbs up. Well, you might not want to do a thumbs up, but give me an indicator for individual who actually you're paying some fees to the bank, either to handle the account, NSFs, as they call them, non-sufficient funds, because you happen to overdraw the account because you went out to eat on Saturday and forgot the fact that you had something coming in on Monday. We pay taxes. You will not necessarily know what you're going to pay IRS or the state with regard to the taxes, because it's actually based on profit. But you can get an idea of how much money you potentially are going to have to pay, which also will help to indicate what kind of revenues you actually need to make so that you can cover, again, the expenses that you have. This last page here These are categories. First of all, there's no such thing as miscellaneous. You should never have a miscellaneous category when you're filing your taxes. You really shouldn't have it on your books because every dime that you spent went somewhere. Where did it go? Now, is it an allowable deduction is another story altogether. But you should never technically have miscellaneous. Membership fees, personally, as far as I'm concerned, that's subscriptions. If you got courier, mail, and postage, this is an office expense. This is not a miscellaneous. And insurance definitely is not miscellaneous. So these miscellaneous in and of itself, and I should have just highlighted as miscellaneous, should never exist as a category in your books. And insurance, membership fees, and the whole courier, mail, and postage and stuff like that all have categories. All right, does anybody have any questions at this particular point? Adam, any questions in the chat by chance? Give me a thumbs up if folks are with me. Yes.
Let me take a look here. I don't see any questions in the chat. I'll ask out there if anybody has any questions. You can put them in the chat or speak up before we move on, guys.
Alfonso, you're going to be a pro at this in a minute. All right. If anybody has, what we got here? 3 add-ons. No cues. Okay, so we're going to keep it moving. Some of you are brand new. You are in the startup phase. There are some costs that you will have to spend. Now, my conversation from here out is going to be split. And it's going to be split from an operations standpoint. And I'm also going to talk about if you happen to be doing something which is associated to, quote unquote, trying to get a loan or trying to leverage money even as a matter of investment, okay? So I don't want people to get too confused here. So you got startup costs, your brand new business. There are certain things that you actually are going to pay or put in play prior to you open up your doors, prior to you even selling online. If you didn't already have a laptop and or a desktop computer or whatever, you had to get one. You got an iPad. You have to put certain services potentially in place. You're paying for web pages, things of that nature. Your permits, licenses. There are people you talk to. Sometimes they're classified as consultants. You buy equipment, initial inventory, you're legal. Operating cash is an interesting piece. What a lot of people don't know and potentially have really never been told is that when you're starting a business, you need to have some cash available for you to pay some of the bills you're about to incur. Now we're going to switch in if you happen to be getting a loan. What a lot of people are not told is you have to contribute something to your business and show that it's been contributed to the business. But you also need to be able to have a couple dollars on the side so you can actually pay some up and coming bills. Your startup cost might include all those dollars, but the use of that money is going to be separated. Now, I'll go over this a lot later, but one of the interesting pieces, it wears on you a lot when you're taking a look at people applying for loans and say they put $10,000 in, okay? They spent the $10,000 in securing a place, doing some build out, hiring some individuals, and that's a contribution. But they did it 60 days ago. The bank wants to see some receipts on certain things because they want to validate the fact that you've actually contributed to the business and that it was relatively recent and that the hiring that you supposedly paid out didn't include yourself because you can't be included, especially as a DBA. Now, if you're an LLC, subchapter S, C Corps, that's something a little different. But you did this build out. You hired some employees. You signed a lease. And what you technically are doing when you go to the bank to try to get some additional money here to run the operation and to buy some inventory, and I got to pay some people and I need a little bit of money to kind of, finish up the buildup that I actually did. That's poor planning. If you're going to get a loan, you need to have a conversation with somebody from the institution and ask them point blank, what is it that not only do I need, but what do you want to see? You have to be very, very clear on that, because they'll run you around like rabbits. Get a clear idea of what it is, especially as a startup. By the way, most financial institutions do not give you money for buildings unless that building is actually going to generate the kind of monies that will actually not only pay for the building itself, but that you personally have a financial stake, which actually exists here, that can also cover the shortcomings for the purchase of that building. So I got a lot of people who are looking for buildings. And I'm trying to slow some of them up because you need some cash. And also, when you're doing, again, your number, you're putting together your projections. This is your income statement trying to show what you're going to make in the future. Some people need 3 years, some people need 5 years. When you have a building, please, please, please put in the fact that there's some maintenance for this building. There's snow removal. We live in Western New York. I got too many people talking about, well, I'm going to go out and shovel. Okay. You're going to go around and shovel a building that would used to be an ex-manufacturing company that would take you 2 hours to actually do it. Now, you might do that, but figure out how much it would actually cost and put it in your numbers so that you have a real idea of what it's costing you to do what you need to do. You got signage, stationery, supplies, website. I got 3 others listed underneath here because there's always something that comes up associated with your startup costs. That's just startup. Anybody have any questions on startup costs? I know most of you are existing businesses doing something. You kind of, behind the wall a little bit here. I get that. But as you start bringing these businesses up to the forefront into the marketplace, these are things that you need to really be aware of. I'm also going to make this comment. Anybody that makes some revenues has cost of goods sold. When you subtract that, you have net revenues. You subtract your expenses from that, and you actually have a profit. That is a good thing. Yes, you will have to pay some taxes on it, but that's the cost of doing business. And people need to get over that, because a lot of people's numbers are really not correct associated with the money they need to make for revenues, because they're too busy trying to avoid paying taxes, or they're doing stuff or paying people under the table. Record what you spend on a business. People say, well, I didn't make any money, so I didn't file any taxes. Taxes are enormously important to validate the fact that you have a business, especially if you're going to a loan officer. You can tell me you ran a business for 20 years. Did you file any taxes? You tell me no, I have to share with you, I don't know what I can do for you, because you have no validation for the business that you actually engaged in. None. So don't worry about the aspect of relative taxes. And as quiet as it's kept, for all the money that's actually technically is spent on a business, for every dollar you get, take 20% of it, put it to the side in a cookie jar, and when tax time comes due, you'll have a little extra money in order to do some stuff. Barbara, you got a question?
Yes, I do. So what am I not maybe thinking about in terms of if I have a internet-based business, or I'm thinking it's going to be internet-based or it's going to be service-based, and so I'm not seeing where I would get to, like building stuff and that. am I missing something in terms of not thinking that a lot of the finances, the startup costs would apply as much?
You have some things that would be a part of your startup. You have other stuff that's really just a part of your operation. You're working out of your home. Not like you're putting a down payment on for being in the space. But you do use part of that home. You use gas, lights, electric, okay? These are costs that people don't even think about most of the time, which are associated with their business. I travel to make deliveries. Are you recording the fact that you're spending gas on making that delivery? You're keeping a track of your mileage, because actually for tax purposes, technically, you're only supposed to be able to use one or the other. You can either use mileage, and they'll give you for that, but if you're driving around a truck, trust me, mileage is not enough to cover much of anything. But if you have certain expenses which are associated, gas, repairs, things of that nature, now you're not going to get 100% associated with it. And even if you, and this is another important side note, even if you use your vehicle, which you think 100% of the time for your business, IRS would never allow it. Worst case scenario is you use 90% of your costs associated with that use of the vehicle. And all of that becomes potentially a deductible item. Now I'm gonna put that caveat, that disclaimer in here. Please have communications with an appropriate accountant, bookkeeper. Do not call IRS on that, because IRS will tell you something totally different. That's not to your advantage. And I shouldn't say that, but find an accountant who will say, is this allowable? Because I'm using my car 50% of the time, but I want to be able to deduct 50% of the costs associated with my business because I'm using it for my business, okay? But like I say, as a matter of new start, you're not putting a down payment on rent. You're not hooking up brand new phones. And now, if you didn't have internet beforehand, guess what? That's a startup cost. I'm engaging in internet and cable for some individuals because they need to use the rest of the internet to do whatever they need to do. Did that help you a little bit?
Yes, and that also begged the question too, that you talked about a bookkeeper is good to start off with, but then there's two things you said. You also said that the IRS guidelines weren't necessarily favorable to those who are micro businesses. Like, I feel like that's what I'd be starting in micro business. So is there like a more, is the accountant then the better person then for a business like that to go to first?
You're always going to go to your bookkeeper or your accountant first as a matter of question. Okay? Don't go to the IRS, because the IRS is going to feed you what is the regulation, and the regulation in and of itself is vague at best. So if you want advice with regard to, quote unquote, how your money potentially can be recorded on your books, which are going to be changed slightly probably again anyway when it comes time for you doing your taxes, go to a bookkeeper or an accountant. But I'm going to share with everybody there, and this is what a lot of people unfortunately don't necessarily always understand. It is allowable for you to deduct those things which are associated for the business. As a matter of fact, let me partially answer this other question, which also may help some other individuals. So I'm a cyclist. I occasionally use Uber. How do I decide the amount for the business? Or do I forget this cost? If you're using an Uber to go to an appointment, you're going to use what you spent on Uber. If you're going to a client, if you're going to pick up an item and you happen to use Uber, you're picking up an item which is directly associated with the business. That is a cost of doing business. Now, it might get to be a high cost, but it's still a cost. Sydney, Barb, oh, you're answering Barb's thing. Okay.
Thanks.
Okay, did it help a little?
Yes, that helped. Thanks.
Okay. Okay, cool. And thank you, Sydney, for putting that piece in the chat. All right, as we move forward, sources and use. Very few people have ever actually seen this. Source and use is actually used for individuals that are quote unquote going for loans. The other time you may actually see it depending on the software that you're actually using for your cash flow statements. What I'm going to show you is when you're applying for a loan. Now somebody's going to apply to get some money from Passstone. Yay, everybody clap. You need 30 for your project. But one of the things I mentioned to you is the fact that you have to contribute to the project. We can talk about later this whole thing about owner's contribution because this is another falsehood which is actually being pushed out there. But the reality is this, the more money the owner is contributing into their particular business in trying to make an attempt to borrow money, the less nervous the lender has a tendency of being because they're not fronting the entire operation, or at least the startup of the operation, or the project that you're engaging in. So in this particular case, Passstone is going to lend the individual $20,000. That's at least the request amount. The owner is putting $10,000. The total source, where the money's coming from, the source is 30 grand. Use of those particular proceeds. There's no inventory being bought. 13,000 is being associated for working capital, which I have highlighted for a reason. Equipment and purchases. Now they're buying some equipment. Actually, if I'm not mistaken, part of this may have come from someone that was trying to do a restaurant, if I'm not mistaken. They've got equipment. This is a part of what's called asset lending. It's something that the financial institution is going to put a lien on when the loan is taken out, because they also want to be able to secure their money, because if there's a problem, they want to be able to try to recoup as much of their funding as possible. These rates of recovery are different for purchases as opposed to equipment, but I highlighted working capital for a reason. They need $13,000 for working capital. And if everybody seems to remember, I made a comment about the fact that sometimes when you're starting the business or even just operating it, you need some cash to pay some future bills. Part of that cash that you're using to pay for future bills is normally classified as working capital. This is cash. And almost every financial institution that I know, it doesn't give you a working capital loan. There was only one group that I knew of in Western New York, and that program's actually been put on hold. Working capital, I'm handing you cash. I don't know you from Adam. I don't care how great your plan is. I'm handing you cash, and I'm hoping and praying that you're going to actually be able to pay me back at some point. I also made an interesting comment about the fact, though, that working capital can be used for a couple of things. The owner is contributing $10,000. This may actually be just totally cash. They may be using part or all of this $10,000 to help with the working capital. Providing the fact that that's explained in the loan application, the bank at least is having an idea of exactly what's going on with this money, because there are some instances I've heard the bank will actually hold this money. They'll actually try to freeze it and secure it, just so that nothing happens to the relative account. But this is all a matter of negotiation. But again, source, 30,000. This is what it's going to be used for, 30,000. So if you're ever applying for a loan, this is a piece that is going to potentially come up, if not as a separate sheet, but it will come up in your cash flow. I mean, in your cash flow statement, I'm sorry. So does anybody have any
Mike,
questions about source and use? Yeah.
Yeah, so I'm going to, looks like Lamar on Facebook Live has a question. Lamar, if you want to type that into the chat, I will relay that to Mr. McCarley, if you can hear me.
All right, so if he types it in, just let me know.
I don't think he's on this class anymore. I think his phone died, so that's why he's watching the class on Facebook Live.
Oh, okay. All right, so, well, Lamar, you can actually send a question to Adam, and I'll try to answer it that way. So now, next item up for bid, before success. Everybody's got the pens and paper ready? Here we go. The concept of before success really came about because people really needed to kind of understand what kind of money they may have needed to generate in order to cover the costs for the business. This used to be originally called bottoms up. It was originally created some 15 years ago and more recently has been renamed to before success. Before success actually takes in mind the business expenses. You notice there's this multiplier here, 5.86. This is a growth matrix. This covers a couple of things. Number one, give me a thumbs up. How many people have heard about or know about Murphy's Law? Okay, I got one person, Murphy's Law. Has anybody ever heard of it or know about it? Give me a thumbs up if you happen to have heard about it, know about it. For those individuals that can actually, okay, there we go. So by the responses, I'm under the impression there are not a lot of people who've heard of Murphy's Law. Murphy's Law primarily is if there's anything that can go wrong, it will go wrong. And as far as I'm concerned, for micro enterprises, what has a tendency of happening, it comes directly out of your pocket. So this 5.86 includes a little bit of Murphy's Law. It includes a small percentage associated with taxes that you may actually have to pay for the transaction. And most importantly, and the larger portion of this 5.86 is growth. What a lot of people don't understand is if your business does not grow, I'm sorry to say, the business dies. We're not running hobbies here, people. We're running businesses. If you want to run not-for-profit, though its fundamental aspect for raising money is different, the same principle applies. You have to generate enough revenue to cover those business expenses, the direct costs associated with the operation in order to continue. So I'm going to give you an example, and this was actually a live example from someone else. This individual had $7,300 a month for business expenses. We're multiplying it by 5.86. They also had cost of goods sold at about $47.10. When all these numbers are added up, the assumption of the revenues which were actually necessary was $47,490. Now, this is where people actually look like deer in headlights. This number here, this 47,000, that's a monthly number. That's not annual. That is a monthly number. So when people suddenly start taking a look at, well, I need to make that much money per month, it's just a guide and a goal. Because what did I say were the 4 uses of business funds? Anybody chime in?
The 4 uses of the business fund were
Funds, yes.
employees, operating expenses, operating debt, and then you.
Correct. So if you want to be able to cover all that stuff, this was the kind of money that person needed to actually make. And I will also add this. When I ask people how much do you spend on an average monthly basis, and this is something we're going to get into more next week with regard to the success formula, a lot of people are not accounting for certain things. Well, I don't know what it is. I do it once a year. Divided by 11. Not 12, divided by 11, because normally what we do is if we're actually saving money, it'll be in the 12th month that we spend it. If you're paying a bill quarterly, then you take whatever that quarterly bill is, divided by 2 because you have 2 months to save for it, as it were, because the third month you're paying for it. It's a different way of thinking about not only the generation for money, but how you should put money to the side in order to cover the bills that you actually have. Is everybody understanding that? Does that make sense? Any questions on it? Give me a thumbs up, give me a thumbs up, give me an indicator. I got a lot of people on the call, but I'm not sure that you actually are hearing me or understand me. And if you don't understand, that's fine. Because again, we're going to go over this again a little bit next week, and I'm going to help clarify some of the things that are going into play. Next item on for bid. Now I'm going to show you the difference between how people had been originally calculating what they possibly needed as revenues for the business. That's the old way. Versus using the before success. Is everybody ready? They're holding their chairs because I don't want anybody falling out. Okay? Pow! You're looking at an income statement. Two different ways of actually determining it. The income stream or operating revenues, the old way, was determined at about 12 grand. And actually, I'm going to go over the old way first. Cost of goods, 4,700, which gave you a gross profit of 7,291. Operating expenses were 3 grand. Sales and general administration, that's what S&GA are, 5 grand. Operating expenses was $8,000. But look, net income is a negative $709. Now, because this is negative, you really don't have any pay any taxes, as it were, because you didn't make any money. But I want you to now take a look at, in the determining of before success, income stream was determined at 42,770. Now that seems a lot compared to the 12,000. And it is, but understand the perspective. Your cost of goods in this particular example is 17,000. The original cost of good assumption in this particular piece was something like 35, 38%, something like that, of this number. Well, when the numbers get higher here for the necessary revenues, this also, cost of goods also is going to get higher. So that is truly not out of line. But notice, you have $25,000, which is supposedly left over as gross profit. That seems to be a lot of money. As a matter of fact, if you ever submitted this to me as a banker, I probably wouldn't give you a loan because you're going to make a whole lot of money. What do you need my money for? You will notice owner's compensation and sales and general administration are the same as you did in the old way. It's $8,000. But now your net income happens to be $17,000. There's taxes to be paid on this. I think this tax base is based on, I think it's 20%. Don't quote me on that, but maybe it's a little less than 20. Or a little more, I'm sorry. And the net income after tax is 12 grand, which is left over to carry over into the next month. And again, these are monthly figures. Now, individuals may or may not get this, but I want to show you this because when I talk about stuff next week, you'll have a better idea. Again, old way, before success. This is the summary of both. You'll notice that one of the things that I have on here as the end piece, you pay $52.99 for taxes. Net income, you got 12. But what's this figure I have highlighted? Retirement. As an owner of a small business, you are not necessarily, unless you're an employee of your company, paying into the retirement system. You're not paying into Social Security. And so one of the things that ends up happening is you have to begin to create your own retirement account. This is a part of planning your future. In figuring your numbers out the old way, you have no way to pay anything into your retirement. A new item which has also been added to this particular formula is health insurance, which many of you are aware of is astronomically expensive. But as a business owner, and I'm going to remove the folks that are DBAs, because as a DBA, you definitely have to create your own retirement. But even as an LLC, you have to take a look at monies that have to be generated, which are over and above what you spend, over and above what you're pulling out for yourself, over and above what you're paying your employees, just to retire. And this is you. Now, individuals that actually have packages that are put together will actually see that even more, because the tax burden is one thing, and then if your employees have benefits, that's another cost. That's money that you're not necessarily spending it immediately, but it's being recorded because you're taking that money to save it, to put it into an escrow account for the future for your employees with regard to retirement. But again, if you're not generating, you'll notice on this piece, enough money, enough revenues, and this is just a goal. This is a goal. This is what you want to strive to. Now, I'm only making $1,000 a month. Okay, cool. But I also know that you're not sitting around and spending this kind of money either. $3,000 for your compensation, you can't pull it out from the business. And way too many people are not pulling money out of their business because they can't, and they need to. So all of this, looking at the numbers, understanding what they mean, how do they impact you, becomes enormously important. Is anybody frustrated at this particular point? Give me a thumbs up. Don't be afraid.
Me.
Who actually said me? Who was that?
Jasmine.
Hi, Jasmine.
Hi.
Why are you frustrated? What?
I'm trying to pay attention, and you doing the one thing I hate is math, numbers, all this. And then I'm doing remote learning all at the same time with 3 kids. I'm trying to get this, but it's like, you lost me a long time ago. I'm just going to be honest.
But I have laid a seed in your brain, which means when we go over some of this stuff again next week, it will be a little clearer for you.
Okay.
It is enormously frustrating. And Jasmine's issue, the thing with numbers, guess what? That's everybody's issue that I have a tendency of dealing with. Nobody likes the numbers.
I don't.
But everybody wants to buy the new car, get the house, do all this other stuff. And then I ask the question, well, exactly how did you intended on doing this? Where's the money you're going to generate? How are you going to get these people?
I don't know.
And so next week, I'm going to talk about what's called the success formula itself.
Okay.
And we're also going to talk about the aspect of marketing, which gets to be also a very interesting piece. Yes, Kay?
I actually am the opposite. I love numbers. And one thing you mentioned was the taxes and set aside 20%. And the reason I'm in this class is because I don't know everything, but from what I understand, there's like tax advantage from being a business owner versus a W-2 earner. And that 20% seems to be more on the W-2 earner side, right?
Nope. I just said take that figure because people need to take money out of their business and put it to the side, because they get at the end of the year when their taxes are done and it says you owe $2,000, you owe $1,000. Most people don't have that money. They can't pull it out of their pocket on a good day. Okay.
So that's just like on the up end to make sure you have more than enough to cover, but doesn't necessarily mean it will be,
it's not going to cover everything. But if you're going to have something, and it's better to have something than nothing. Traditionally, I really used to talk to, whatever you make, take 30% of it. And I'm actually playing with some stuff now, trying to look at that example. But I want, just from that note itself, think about it. Whatever money you charge for a particular product or item, if you have to take a third of it to put it to the side, how much money is actually left for you?
Right.
And a lot of people get real disappointed. And then, yes, Murphy's Law definitely comes into play. You're trying to minimize it. I dealt with a business that was open in a cafe. First of all, I hope that answered your question a little bit, Kay. And I'm glad you love numbers, okay? Because
Well,
it's
just real quick,
helpful.
one other question. I don't know if you were planning to cover it in this session, but will we ever go over a situation where like you compare the two, like a W-2 owner versus a business owner, where the salary or income is the same and we can see the difference between, you know, how things
Well,
are
the way you're talking about it, probably not. The thing about being a W-2 owner, a bit W-2, is really simple. You work for somebody else. That's just the bottom line. And most everything that you actually are generating, most of the stuff you can't deduct tax-wise anyway. As a business, and I'm not talking about a DBA, I'm talking about LLC, subchapter SC corporation, there is a distinct advantage to actually having deductions that lowers the amount that IRS will see as this is what you're going to pay us taxes on.
Okay. I'd be interested in that class if one becomes available.
Okay, but I do one of the quickest examples. You made $50,000 as a W-2 earner. You made $50,000 for a business. $50,000, you're going to get hit. You're going to fall in probably the 48% bracket. You're pretty much losing half your money. Let's just put it that way.
Right.
50,000, however, as a business, you got $30,000 worth of expenses in some way, shape, or form, which includes, by the way, you being paid a salary.
Right. That's
so
what
now what ends up happening, your profit, 20,000. So that's what you're probably going to end up paying your taxes on as a 20,000, not on the 50 that you technically generated. As a W-2, you pay 30% based on the money you generated. You don't even get to take that money home.
Right.
Because taxes on net would be a lot different as a W-2 earner. But that's one of the differences. And this is why when you get into business, not just an entrepreneur, not self-employed, when you start hiring employees and things of this nature, people complain about how much money they spend, but the reality actually gets to be this. You are spending money, and so IRS is actually allowing you and giving you some points of credit because you're actually hiring individuals. You're paying into the economy. And so we're going to allow you to deduct this stuff, and so we're going to charge you a slightly different rate for taxes. A lot of people don't like that idea, but the reality is if I'm hiring half the town, I'm on a break. I'm not going to pay these high absorbent tax fees, and I'm hiring half the town. Where's my benefit for hiring the town, even though I'm making money? So it's an interesting situation.
Okay.
All right. So anybody else have any other interesting questions? Anybody else love numbers? Did everybody bring some aspirin?
Shay likes it.
Yes, what you got, Shay?
I can't find any of my features over here, but I was just patiently waiting to tell you I absolutely love that. I love the numbers right now. Like I'm excited because I wasn't a mathematician, but I absolutely enjoy the idea of taking things and breaking it down and making a budget so that I can clearly see where everything is going. It makes it easier for me to understand. But that my question was, when we were going back to taxes, you were saying 20%, but is that like on the high end or is it the lower end? Because I'm a better safe than sorry girl, and I'm wondering if 30 would be better.
Listen, you can use 30 if you want, but be clear. And using the 30% number, if you're actually going to use it, means that there's technically less money for the operation. 20% 20% was better than nothing. 10% is a joke, okay? All right, that's just a joke.
Yeah.
20%, however, if you can pull it to the side, it at least helps at the end of the year. And let me please say this to everybody, and I want to make this very, very clear, okay? You operate under two sets of books. The money that you bring in and what you spend for your business really comes out to be one thing. When your tax preparer puts your stuff together, your taxes are going to look a little different. What you might owe or what you get back might be a little different. Because remember, as a DBA, the stuff goes through your personal taxes, your 1040, okay? As a single owner LLC, it also goes through, and it's put on a Schedule C, and that comes back also, it reduces your impact of what potential taxes you may actually have to pay. As an S Corp, you're actually filling out 1120S. It's slightly different because you are a shareholder, and therefore as a shareholder, 9 times out of 10, you're getting a K1 because you're sharing the profits. Same thing as a C Corp. There are these interesting nuances that exist in the establishment of companies legally. In one of these sessions, I'm gonna actually do a real short piece on it because you need to have a conversation with an attorney, but I've become more supportive of the fact of individuals doing an LLC, even as a sole owner LLC, because you can deduct yourself for a salary, which you cannot do for a DBA. Does that mean 50? There was a question on here by Mammon. Does that mean a 50,000 profit of 30% taxes, and then they're paying 15,000 in taxes? Can you explain more of the escrow? I'm going to probably do a little more of the explaining of the whole tax piece actually in the next session, because taxes are almost as complicated as it is as setting up legal structure. So I'm not avoiding the question, but I want people to actually understand. You have to really begin to understand what your numbers do in your books to be very, very clear about what actually happens with regard to having to deal with IRS and any of the other charges that you will actually be impacted by for running the business, especially when you're taking a look at the future. Because the future impact, I gave you an example of $17,000, which is left over here. Guess what? You're going to be hit with taxes on that deal. But this money here, this net income money, is also a part of your future. It's a part of your retirement you're putting away. It's a part of your college fund you're putting away for your children. Okay? So again, we're going to talk a little more about that next week. All right? Anybody got any more questions? I know some people are confused. I know some people are frustrated. It's fine. It's really okay. Next week, hopefully things will become a little clearer. And if they become a little clearer, that's a good thing. All right, well, you know what, Adam? This is it. I don't want to run over too much time. I'm going to run over as it was. Thank you for letting me, get this out to these individuals.
Yeah, thank you very much, Mr. McCarley. I'm going to give you a round of applause because the math side of business is always a tricky topic to tackle, and you've done it gracefully, and you've informed us. And I'm looking forward to next week too. Jasmine, I totally understand your concerns and hesitations. The numbers part can get a little tricky, but we have a great teacher here in Mr. McCarley, so it's going to be next week. The more you go over this, the more face time you have with this, the better. So, and I know a lot of people on this call are probably feeling the same way. Oh my gosh, I haven't had to do, this kind of structured math since high school or college, or so just we'll get a lot of face time with it. You'll see it more and more, and we're going to have this up on YouTube. So feel free to take a look at it on there if you want to, and just go back through it, and you'll have you'll have access to the slides as well here once we send that email out. But Mike, have you given me control of the screen yet?
Oh, don't know. I'm so sorry.
That's okay. Not
there
a problem.
You go. All right.
Thank you, sir.
You back to hosting?
Here we go. Wonderful. Oh, let's see if I can. I'll kind of fly through that. Don't look. So as we do every week, well, first, thank you, Mr. McCarley. Again, everybody, give a round of applause to Mr. McCarley for tackling such a tricky subject.
Thank you, everybody. Thank you.
We have several more weeks of this, so we're getting into it now. And week 4 is next week. We'll be doing more numbers next week, Mr. McCarley, right?
Yes, and it's going to be a little softer. It's not going to be as bad. Okay, but we're also going to talk a little bit about the market, not so much marketing, but a determination of the market.
Wonderful. So make sure you guys come back for that for week 4 next Monday, 12 to 1:30. In the meantime, we want to buy you lunch. So we don't get to see you guys face to face. We don't get to have that interaction with you and feed you like we normally would, but we do want to feed you one day this week. So lunch is on us one day this week. Let us know in the chat right now where you want to eat. In Buffalo, we have Freddie J's Barbecue and Sunshine Vegan Eats. So those are the options for those who would like to dine in Buffalo. And then in Rochester, we have El Pilon Criollo and the Arnett Cafe. Those are your Rochester options. So go ahead and in the chat below, put down where you want to eat. We will get those vouchers out to you later this week, and lunch is on us. And then, of course, we'll go over our other offerings, other program offerings for the upcoming week or so here. This Wednesday at 12 o'clock, from 12 to 1:30, right here on Zoom. We're going to have week 5 of Tech Talks. Anthony's not on the call right now to pitch it, so I will. We're going to be talking about website development and content management with Mike Warren. Going to teach you business owners and aspiring business owners how to really use your website and your content to grow your market, to establish who you are, establish your brand, and educate people as to who you are and what you do. So come for week 5 and 6 of Tech Talks. Week 5 is this Wednesday, and week 6 is next Wednesday, 12 to 1:30, same time as Next Level. Speaking of Next Level, next week, week 4, come in. We're going to be talking about the market. We're going to be talking some more numbers, and we're going to get more FaceTime with the math, which will make it, you guys will get a little more comfortable with everything. So come in and be ready for that. And I love that you guys take notes. That's so cool to me. You know, this isn't, it's not a traditional classroom setting, but you guys are taking notes and you're engaged. Actually, I have notes here too. So because last week when Mr. McCarley asked me some questions as we were doing our dry run, I felt like a total idiot because I couldn't answer the questions. So now I'm taking notes, so I'll be prepared, Mr. McCarley.
All right.
And then, of course, this Friday, we have our brand new Small Business Forum launching again, our brand new season of Small Business Forum. We're going to be talking about nonprofits. So for those of you who want to start a nonprofit, or you're interested in starting a nonprofit, or you are currently running a nonprofit, please join us. And we'll talk about the differences between a nonprofit and a for-profit and how you can earn income for your nonprofit business, and maybe decide whether a nonprofit or the for-profit venue is right for you. We'll have a great panel of individuals there, and you guys can register for that in the link in your email, and it's probably in the chat somewhere as well. So with all that said, if there are no other questions, we're going to go ahead and wrap up. But if you guys have questions, you can reach us at key@pathstone.org. You can also find us on Instagram and Facebook. Please connect with us. We're going to send out this follow-up email here. If you guys have anything that we can do for you, please let me know. Also, Jahida, you may have to help me with this. If pecky@pathstone.org is not in your address book, or if it's not a recognized email address in your email contact list, there may be an issue with spam or it may get filtered out. So just make sure that you have pecky@pathstone.org as a recognized email in your address book. Jahida, did I say that right?
Yes, you did. Yeah, Pecky@Pathstone. For the workshops, we send out 24-hour reminders and 1-hour reminders. I know some people have been getting something from Eventbrite, which kind of just puts them in a loop and they are not able to get into the session. So please look out for the Pecky@Pathstone emails. Those emails have the correct link to get into the session. And if at any point, you're having trouble accessing the session, I'll put my email in the chat as well. Feel free to, send me a message and I will go ahead and get the links out to you as well. Thank you so much, folks.
Wonderful. Well, guys, that's going to do it for us this week. If you need anything else, you know how to reach us, and we will talk to you next Monday from 12 to 1:30 on Next Level. Thanks, guys, so much.
All right, guys. Have a good one.
Take care, everyone.
Have a good week.